Folks, it is official. We have chaos in the markets, just like that, in a snap of a fingers. One moment, everything's fine. Next moment, you have absolute chaos in the markets. And I'll be honest, it's been a little sleepy in the markets. Hasn't been a lot of drama for a few months here. It's kind of like, what's going on? Like, everybody's waiting on something to happen. And my gosh, do we have stuff happening now? Dominoes are falling all over the place. Boy, do we have a lot to get into. I appreciate everybody joining me. Thank you for being subscribed. Man, do we have some stuff to get into in this one. It's time to wake up, folks, because it's getting interesting out there now at this point in time, okay? Last night on the Reaction channel, I did a video going into that I thought SVB was likely going to go under based upon what I was hearing with how many people were pulling out money. I thought it was going to be an absolute bank run and they were going to go under. And sure enough, front page of CNBC here today, Silicon Valley Bank is shut down by regulators in the biggest bank failure since the global financial crisis. This is going to have fallout all over the place, okay? This is massive, absolutely massive in regards to the Silicon Valley Bank here, okay? Silicon Valley Bank is shut down by regulators in the biggest bank failure since the global financial crisis. The FDIC said in an announcement that insured depositors will have access to their deposits no later than Monday morning. SVB's branch offices will also reopen at that time under the control of the regulator. The FDIC's standard insurance covers up to $250,000 per depositor per bank for each account ownership category, okay? So this is very problematic here, okay? So basically FDIC just took them over, okay? And if you've never seen this process work out, back in the great financial crisis, 60 Minutes did a great piece going into essentially like what happens when the FDIC takes over a bank. And so now the FDIC has completely taken this over now at this point in time, okay? The concerning part of this, and this is extremely concerning, is you're FDIC insured to $250,000. If you got 10 mil with them that was sitting there and you were trying to get it out and you didn't get it out in time, you got $250,000 coming your way, okay? Not $10 million. This is a huge, huge problem here. And a lot of companies, a lot of higher net worth individuals had a lot of money tied up with this SVB bank, okay? This is extremely serious. And now, what do these companies do? What do these individuals do that had significant sums of money tied up there, okay? I'm telling you, like, they might never see that money again, okay? And if they do see any money, it might be $250,000, which might have been a small potatoes compared to what they had, okay? Now, some people saw this coming, and they were already getting their money out over the past few weeks. But a lot of folks were kind of blindsided by this whole situation and never really saw this whole situation going the way it went. And next thing you know, some people are looking around like, oh my gosh, what? This is all of a sudden going under, right? Check this out. This is startling here. This is the biggest bank failure since 2001, right? This is the chart of them, right? Silicon Valley Bank is the second biggest bank failure since 2001. That's shocking. That just goes to show you the sheer size of how big this was. And like I said, 99% of people out there had never heard of this bank before yesterday, okay? That's the bottom line with that. Like Silicon Valley Bank, like it's not like it's a JP Morgan. It's not like it's a Wells Fargo or Bank of America. And this thing is massive. It reminds you similar to like a Lehman Brothers type situation, right? Most people never heard of Lehman Brothers until all of a sudden they were in the news for failing, right? So this is a very, very serious, very, very serious matter in regards to this, right? And when it comes to Silicon Valley, this is a huge issue because this is going to have fallout all over Silicon Valley. And you're going to have essentially startups that don't have capital now at this point in time. You're going to see a huge kind of like, I would call it mini depression in Silicon Valley. It had already been getting ugly. If you know anything about kind of Silicon Valley tech, everything that's been going on in the past year there, it's been kind of like a little mini depression. It's going to get a lot worse here, okay? And the reason being is the way these almost all the startups in Silicon Valley, all these VC companies, right? Almost all of them lose money. And it's such a different way of doing business in that whole VC space. And it's the Ponzi scheme, unfortunately, is kind of coming to an end here, okay? And it's going to be very, very bad for ultimately everybody, okay? And you might think you might not be affected. You will be affected, actually, okay? The old school way of building a business model, okay, is like, hey, I want to start a landscaping business. Okay, I have a lawnmower, so I go talk to my neighbors and I say, hey, I'll cut your yard for $30. Okay, and they're like, okay, yeah, that's awesome. I don't want to do that crap anyways. You can come cut it for $30. Okay, so I start cutting all my neighbors' lawns for $30. Right, I get more customers down the street and whatnot. I walk my lawnmower over. Okay, this is sweet. Right. I eventually make enough money from cutting all these people's lawns that I buy a trimmer now so I can trim their bushes and everything like that, right? And so now I'm doing full yard landscaping for $70. I'm like, hey, $70, I'll do it all. I won't just cut your lawn. I'll trim your trees, I'll trim your bushes, all this stuff, okay? And they're like, oh, great, yeah, $70, okay? So sweet. So I start saving up more money and I buy a used truck over time, right? Now I can start doing landscaping outside of my area. I can go to some other neighborhoods, right? And take my equipment over there and get more customers. Next thing you know, I'm doing this full time, right? Next thing you know, I hire a worker. So we can start doing twice as much, right? Because if I have a worker, we should be able to work twice as fast. I could do twice as many homes as I used to do, right? And they can make money from that, right? And I'll make even more money because ultimately I won't pay the worker as much as obviously I'm making, right? So then I go ahead and I hire 2 more workers, and now I'm going to manage them. So rather than me personally cutting the grass and trimming the trees and all that, I'm going to hire them, right? Then I'm going to make a bunch of money off that, right? And I'll hire 4 more workers, right? And then I'll promote one of those people to a manager. It's beautiful. That's the old school way of doing business model. You know what the problem with this is? It takes a lot of time, and it takes a lot of work, and it takes a lot of effort. Let me show you Ponzi scheme way of doing this, okay? The Silicon Valley way of doing business, okay? Here's the way they do business, right? I have an idea. I want to be the Uber of landscaping. Oh, this sounds awesome. The Uber of landscaping. I'm going to connect people that want to do landscaping and people that need some yard work done, and I'm going to have those inside an app, right? So I pitch this idea to VCs. Next thing you know, I get my startup seed here, $5 million. Like, that sounds awesome, okay? You can do it, Jeremy. Go do it, okay? So next thing you know, I hire a bunch of very expensive developers to work on this project for me, right? Because I need to build out this app, right? And we're at 0 revenue, right? But the app is made now at this point in time. I say, hey, this is the app, man. It's awesome. I'm going to be able to connect all these people. They're like, oh, this is cool. Here's $10 million. Go out and market this baby, right? So I place a bunch of ads all over Facebook, Instagram, everywhere else, right? And next thing you know, people start seeing the ads. They start downloading the app. They start booking landscaping, right? A bunch of landscapers see the ads, and all of a sudden word starts to spread. Oh, you can make money on this app. You can make more money than if you actually, contacted these people yourselves because this app pays so dang well. Oh, great, okay? So now I got a bunch of landscapers on the platform that can make money, right? Next thing you know, it's like, oh, we got people using the app. We got a bunch of users. We got landscapers on now. Oh, this is awesome, right? We raise another $20 million. Oh, this is beautiful, right? Meanwhile, we're burning money this whole time. Are we making money? No, there's no such thing as profit. We're burning through the cash. And as soon as that cash isn't coming, like, my app's under immediately, okay? It's not like we have any survivability, like we're losing a fortune, right? And welcome to Silicon Valley. That's the way of doing business in Silicon Valley Ponzi scheme land. That's how you do it, okay? And you hope that you can just eventually someday maybe make a profit, but it really doesn't matter. At the end of the day, you'll probably be able to take your company public to the public markets, and then at that point in time, like, they'll take it off your hands. But the issue right now is you can't take these companies public because Wall Street wants no appetite for these. Wall Street doesn't have an appetite right now for, a Tesla stock. I can tell you they don't have an appetite for these type of companies. If Wall Street doesn't have an appetite right now for Amazon stock, it doesn't have an appetite for these sorts of companies right now, okay? If Wall Street is selling Google stock pretty much down to a 52-week low, if not multi-year low, it has no appetite for these sorts of companies right now. So the Ponzi scheme doesn't work if the end buyer is not there and not available, and they're not there right now, okay? Never mind, you got all these other issues on top of that, right? Now, the other issue is all of a sudden venture capitalists are saying that the era of, recklessly burning cash is over, right? And now you need to start making a profit. This hurts the economy, right? Because the beautiful thing with that whole VC space and that whole cheap money sloshing out there is it creates just kind of like dumb money being spent out there on marketing, on hiring people, on doing all this stuff, right? And just spend. And who cares if you make a profit? Just spend the money. Spend the money, right? And so it ends up actually helping the economy in a substantial way in the short term, at least, right? Because you have all these jobs that are created, you have all these opportunities that would never have been presented there if they had to do business the old school way, right? None of that would have, all those software engineers and folks like that, right? They would never have those jobs if it wasn't for the fact that Silicon Valley is just loaded with these money-losing companies and VCs just throw money at them, right? That's the only reason those folks have an opportunity like that, right? But now they're trying to change everything, and this will ultimately not just hurt Silicon Valley and hurt, obviously, Northern California, but this will have ramifications even outside of that as well, right? And this is something that in the short term, it is going to hurt bad, okay? But over the long term, this is healthy. And I'll give it to you kind of like this, right? It was kind of like the housing bubble that we saw, obviously, in the 2000s, right? And in that situation, obviously, home prices came down substantially over a couple of years. It's very painful, right? The home prices peaked in 2007, and they actually hit a trough in 2009, right? And then they stayed low for several years. And there was nasty pain to go through, nasty pain. It hurt, right? But at the end of the day, we had a very healthy housing market for 10 years, off of that, right? And so what I see going on in Silicon Valley right now is a situation that's very similar to kind of what we had in the housing bubble, where you're going to have, another year or two of big pain there, and it's going to hurt bad short term, but ultimately it'll make a much healthier market over the long term. These sorts of bubbles in these situations aren't healthy, okay? And you need to have a healthy market over time. Otherwise, you're setting yourselves up for major problems, right? The other component of this is going to help out big tech immensely, and this is something I've been talking about for years, and I've been telling folks like big tech is going to benefit in an epic way over the long term from the next time we have a major recession and a drought in kind of the Silicon Valley area, okay? And this is for a few reasons. One is, guess what? These companies don't have to worry about a million other companies trying to disrupt them if a lot of this VC money that's sloshed out there isn't being sloshed out there, right? All these companies have to spend crazy amounts of money on trying to these new projects and new things because they're trying to keep up with these VC companies and trying to keep them at bay because everybody's trying to come eat their lunch through these money-losing ways, right? So if you're talking about way less VC money being sloshed out there, you're going to have way less competition for these companies. The second component of this is when it comes to their costs of doing business, okay? And these companies have had their costs astronomically high. They way overhired, right? And we've seen a lot of these companies start to deleverage in terms of that, right? And making their teams more efficient. That's a beautiful thing that's kind of going on there in Silicon Valley and for all those big tech companies, right? Right-sizing their workforce. Second component of those is those companies have been destroyed by software engineer costs and just like folks making a lot of money in Silicon Valley in general, right? And the reason those folks have been making so much money is because, gosh, everybody was hiring like crazy. There's all this VC money out there. All these startups need workers, all this, right? And everybody's trying to make it. At the end of the day, okay, that's coming to an end, okay? Software engineers in San Francisco, median comp, $230,000, okay? $230,000. $230,000 median comp. It's astronomically high, right? I remember when there was a fracking boom that was going on in North Dakota, okay? And I remember hearing about this. This was probably 2010, 2011. And I remember I was working at Quick Trip at that time, making $40,000, $50,000 a year. And I remember hearing about truck drivers and people that were working in the fields and whatnot with no college degrees or anything, basically being hired almost on the spot and making $70,000 to $110,000 starting right away, okay? And I remember hearing about these stories about these folks with no college education or anything, and I remember considering actually moving up there because I was like, my gosh, man, I can make way more money. Yeah, it looks like pretty lame to live there, but I was just all about my money and trying to make as much money and invest as possible, and so I strongly actually considered it, right? And what's the difference between a software engineer and one of those fracking workers? I can tell you, supply and demand, okay? Supply and demand. What happened to a lot of those fracking jobs once the oil boom started to bust in 2015, 2016? Well, immediately, salaries were cut. Some were cut by half. The same exact thing will happen to software engineers and all those folks when the boom goes to bust, right? And next thing you know, when that cheap money's not out there, supply and demand, all of a sudden, next thing you know, the supply of workers goes way up, right? And demand for those workers goes way down. What happens when that happens? Salaries are cut. And next thing you know, the median salary goes from $230-something thousand to $200,000 to $170,000 to $150,000 to $120,000, right? That's what ends up happening. Now, if you're a software engineer and you're watching this, you might say, no, not me, I'm special. No, I hate to tell you, you're not special, okay? You're the same as a fracking worker. You're the same I was working at Quick Trip, okay? You're just another commodity. That's all you are to these companies. You're another commodity. And as soon as times get a little tough, they're going to cut you. They're going to cut you, okay? Unless you're really the creme de la creme, they're going to cut you. Salaries will fall. That will be what that's going to be, okay? It's the way the economy works. It's the way the world works. The only reason those software engineers have been making so much is because of all that cheap money in VC land that's been thrown out there. And so because of that, you've been able to make hundreds of thousands of dollars, even if you're average, subpar, right? And as somebody that used to run an app that was a money-losing business, holy smokes, I was so happy to get out of that. I don't like losing money, okay? I like making money. Losing money is not fun, okay? And I ran, for those that have been watching me a long time, Hungry Bowl, right? An app. And I got to see, oh my gosh, how much mediocrity is in the software engineer space. Holy smokers, that's no joke. It's sad, okay? If you think all those people that are making $250,000 a year are great workers, no, okay? No, I'm telling you, those folks, they wouldn't cut it working a shift at Walmart. It's pathetic. I mean, my gosh, okay? No, big tech. In the short term, this is obviously going to hurt big tech's valuations in tech companies in general, right? But once again, this is a long-term huge benefit to many of these companies because these ones aren't at a position where they're going under or going out or anything like that. And they're actually going to get more powerful in this situation, right? Companies like Shopify are going to become much more powerful over the next few years than they would have been otherwise with this situation happening. So you look at a day like today, everything's getting hit across the board. And as long as there's the concerns out there, the worries with this whole Silicon Valley Bank and everything and the ramifications and the fallout of that, believe me, these valuations can fall more, at least in the short term here, okay? Banking ugly here today. You look at something like SoFi, down almost 10%. SoFi, massive money loser. And, obviously, when it comes to college students, when do they start paying back those debts? If they pay back those debts, who knows? That SoFi has been kind of screwed in this situation, but also, just an ugly income statement type company, right? We'll see what happens there. Deutsche Bank down another 6.7% here today. Ally down another 6% here today, right? This is the regional bank index here, down 4.8%. You want to see the most shocking chart you might have ever seen in your life? Check this baby out, okay? Check this out. This is downright scary. This is a regional banking ETF. I just added this baby to the watch list, right? Look at that. I mean, that's one of the scariest charts I've ever seen in just terms of just falling off a cliff for an ETF. Not even ARK last year looked like that. I mean, that's a straight down move. That's insane, right? I mean, you look at all these other moves. Obviously, this ETF's been kind of on a downwards trend, but it's kind of like normalish moves down, right? Normalish moves downs. This is like a huge, just straight line drop there. And you got to ask yourself, is this the something breaking? Because what's been said out there is the Fed's going to keep raising rates until something breaks. Okay? And that's been the thought process, right? They're going to keep raising until something breaks. And you got to look at a situation like this and look what's happening with the regional banks, right? And the Silicon Valley Bank, and ask yourself, are we at the precipice of this being the stage of something breaking that the Fed looks at and they're like, oh crap, we broke some stuff. That's what you got to start wondering, okay? And we'll see how all this shakes out. But I mean, based upon kind of what I'm seeing, the second biggest bank failure, basically in the past several decades, if not ever in the United States of America, looking at this, it looks to me like some stuff is starting to break here now at this point in time, right? You look at a stock like RH, I think this is a perfect stock to just kind of keep an eye on how rich people are doing, right? And this stock down again here today, right? And this is one of those companies, it's like, with the Silicon Valley Bank situation, right? With the worries that's going to be in tech land, okay, in significant worries, the biggest worries we've had since probably the tech bubble, that's just going to compound in that situation, right? You're looking at California in general, which is a huge customer base for RH and a lot of high net worth individuals, right? I'm telling you, a company like this is going to be in some problems over this next 1 to 2 years because rich just aren't going to be spending like that on things like this, right? They're going to be very prudent with their cash and their capital. And who knows how many folks lost money in the Silicon Valley Bank, right? That are higher net worth individuals that are going to be really freaked out to spend money right now in the short term. That's big worries, right? Oil and gas stocks all got hit here today, right? And that's why I say the ramifications of something like this goes way outside of tech. You may think, oh, I'm okay in oil and gas. No, you're not. There's nothing okay in that situation. When you have something that's as big as this, in the dominoes of this whole situation, everything gets hit. Everything gets hit. It's not like there's some safe place, right? Look at the VIX here today. VIX spiking huge. This is a 5-day. The VIX up 34%. This baby approached 30 here today, right? 30. And this goes to show you somebody knew something, right? People had all of a sudden, I've been hearing a lot over the last couple of weeks about all of a sudden people buying huge options on VIX spiking huge that are very short term that basically were expiring in March. And it's like, what's going on there? Somebody knew something. They knew about this, okay? They knew about this. They knew this was going to hit before it ever hit, okay? It cracks me up, man. They knew it. They knew it, okay? They knew it. And sure enough, all of a sudden, boom, and now we got the VIX spiking huge, right? SDOW went over 30 here today, over 30, right? Now, there's usually a 3x correlation between SDOW and the Dow Jones Industrial Average. There's a little more than that right now. It's a little over 3xing. It depends on how the market's moving because it closes each day, right? So sometimes it can a little underperform, overperform, or underperform whatever's going on in the Dow. But yeah, that baby's just obviously pumping in the moon right now. And when it comes to a lot of these Dow stocks, right? I mean, a lot of them are going to, if we're talking about this as a more systemic problem in a serious situation, a lot of these Dow stocks will continue to get hit as well, right? You think, oh, the Dow, no, they would get hit as well in this situation, right? And that's why you see a stock like Caterpillar down 6% plus here today. If you have banking worries, right, I'm telling you, construction dries up. Look what happened in the great financial crisis. When what do you think funds all these big construction projects? It's all financed by big banks, by debt, by the debt markets. And if you're talking about a freezing of the debt markets, which is a very serious situation we have potentially going on here, what do you think is going to happen to construction? There's a reason Caterpillar was the worst performing stock of the entire Dow Jones here today. Okay? And I'm telling you, if you dry up construction, guess what? You dry up the economy. Okay? And what's scary about this is some construction projects are financed by debt that honestly hasn't even been approved yet, okay? Now, this is a scenario we saw in the great financial crisis where there would be projects half built, 75% built. We still have projects on the Las Vegas Strip, believe it or not, in 2023, there were projects that were almost completed but ran out of money in the great financial crisis. We still have projects like that, okay? There's still strip malls here in Vegas that I know of, okay? One of I can think off the top of my head is on the way out to Lake Las Vegas. They still don't even have any tenants. There were projects that were built back, basically in 2006, 2007. They ran out of money and they didn't get to quite finish it, okay? There were projects I remember all over the place in Arizona that were half built, three-quarter built, that never got completed because they ran out of financing, they ran out of the money. So that's the scary part of this whole situation. That's why I say this goes way bigger than just thinking, oh, it's just Silicon Valley, right? This is way bigger than this, okay? I look at a company like American Express, third worst stock in the Dow today, okay? I'm telling you, American Express, and I called this out a couple months ago, American Express worries me in a significant way, okay? American Express, you used to think about American Express of like, oh, they only have the wealthiest people maybe use their credit cards. I'm telling you, they've gone way down. They've gone way down with their standards based upon what I see, okay? And they've been giving people like these almost unlimited credit cards that I'm like, what? They don't even have a max on it? They gave my wife one of those. I'm not even on the credit card. They gave her one of those. And we've tested out a few times for some big ticket purchases that I'd usually put on another credit card. And we're like, let's try it on this one. It goes through no problem. No problem. No limit on that baby. I'm just like, it's shocking to me. And I'm telling you, the bad component of this is for a company like American Express is they have a potential where, imagine if a bunch of workers get laid off, right? Especially a lot of these Silicon Valley types, right? That probably are American Express customers also, right? And all of a sudden, those folks don't have jobs for a bit. You think they're paying their credit cards? No, that's one component. But the other part is when people don't pay their credit cards, guess what happens? Their credit goes, which means they can't get approved for more credit cards or other credit cards, right? Which means essentially, all of a sudden, American Express's actual accessible TAM goes down substantially. This is another thing that happened in the great financial crisis, okay? So this is why this is a significant problem for even a company like American Express that you might think would be insulated. This has way bigger ramifications than just like, oh, it's this company or that company. It can hit everything, and American Express is one of those that could get hit as well in this situation. I'm telling you, don't be surprised at all if you see American Express's write-offs go up substantially over the next few quarters. Keep an eye on it, okay? I'm telling you, based upon what I see in the real world and what I see in the numbers, I'm thinking like their losses are going to go up substantially over this next few quarters, and it might even get worse in 2024 for them, right? Now, and I take you back. We just had a great situation that kind of showed us the way, right? Last year, crypto, we saw what happened, right? Crypto was kind of the first thing to fall. It's usually the most speculative things fall first, right? And we saw what happened with Terra Luna. And so you heard about Terra Luna. A lot of people never even heard of Terra Luna prior to it happening, right? And all of a sudden this Terra Luna thing is worth nothing, right? And, there's some memes out there about, oh, people lost money on Terra Luna, right? No one had any clue of how big that was going to be for the crypto space. And next thing you know, all of a sudden what happened? Celsius goes under, Voyager is going under, FTX going under. Next thing you know, all these huge companies that were thought they're in no financial jeopardy. Voyager had a ton of money on their balance sheet. They were even getting a profitability. They shouldn't have been at jeopardy of going under. Next thing you know, they're going under. Celsius goes under. FTX. I mean, these things shocked the world, right? And you had, is it snowing outside? It better not be snowing. Is that rain? I don't even know how it's raining out right now. There's not even a cloud up there. I don't understand, okay? I don't know. But anyways, next thing you know, all those guys going under left and right, right? Left and right. The dominoes start falling when something happens and it breaks this thing, and the domino falls over here and over here and over here. And so when you're looking at something like what would just happen here, right? This is a domino situation, right? And once the dominoes start falling, it leads into another, right? Who had exposure to SVB? Supposedly it had $200 billion plus of assets. Oh my gosh, okay? I'm telling you, a lot of people had exposure there. Not just people, companies. Not just companies, but other banks, other investment funds. The fallout from this will be quite substantial, folks. And I'll keep you up to date on everything going on there. I appreciate everybody joining me as always. I made the moves in the Patreon portfolio today. I made 4 moves in there if you want access to see what the moves I'm making, plus support the channel. That will be the pinned comment down there. I appreciate everybody that supports the channel in there. I also appreciate every single person that subscribes to the channel. Keep you guys up to date on everything. Keep checking the reaction channel. I'm sure I'll have some reactions coming. Much love as always, and have a great day.